Hey guys, I'm the Newb investor. First, I just want to say thank you guys for watching my previous videos. I thought I was the only one watching it on replay, to be honest. If you want to share your thoughts, please do so. Feel free to put it there in the comment section below. Today we'll be looking at Apple. Whenever I see this logo, I think of quality, high-end technology. In everything that they do, they produce, they deliver with quality, but also with price. Anyway, this is a must-own stock. Apple is like a rock star, a celebrity. People go crazy for their products. I remember seeing this very long queue inside of a mall one time. I was wondering what's the queues all about. Later on, I found out they're queuing for a new released iPhone. Crazy, right? The crazy things we do for Apple products. They sell hardware, they own an OS, they have cloud. Basically, they made their own world of things. I actually prefer their clouds. It's easier to understand compared to Microsoft's and Google's. They're pioneers of innovation and technology. They don't produce hardwares for the sake of just producing, except they introduce a new one every year or two. But overall, strong moat. I love the model, the product, and yeah. One thing I don't like about Apple is their system update. That's the one thing. I use an iPhone and I can tell you that the system update basically forced me to buy a new one. Anyways, I think Apple is the latest Nokia, and I hope they just won't mess it up. I see Apple continue to have strong demand on their hardware. It's just a very strong established brand that you just don't see going away, at least in the next 10 years. So I am buying Apple, but at what price? Let's look at their financials. Apple is currently trading at 168.64 with the highest price of 182.94. That's 14.3 points and 7.82% from the highs. Market cap is 2.75 trillion with PE of 28.58. Earnings per share trailing 12 months is 6.04 with EPS multiple relative to PE of 4.73 times earnings. That's very high. The current ratio is decent at 1.04. We want that over 1. It's still above 1. Long-term debt of 106.63 billion, cash of 38.63 billion, and free cash flow of 101.85 billion. Price ratio is high at 7.27 but still around my acceptable range. Profit margin in 2021 is 26.58 with 5-year average profit margin of 22.45. Price to cash ratio is 2.4 times my range at 71.24. That's very high. They have very low cash compared to their market cap. Price to free cash flow at 27.02 are still acceptable. These two metrics are way too high compared to the other three companies we've looked into, Google, FB, Microsoft, but they can easily pay their debt long term with their cash and free cash flow within 5-year period. Looking at their revenues, they are growing, but you can see it is not very consistent. 38% revenue increase in 2021 compared to the prior 4-year average of just 4.61. We might want to take this into consideration if this is an anomaly, or that will be the start of a normal growth of probably 10-20% per year. Same thing with net income and EPS. That's a huge jump from last year's. They made like 75% increase in net income and EPS 82%. That's a huge jump, okay? Their 5-year average cost of goods is 60%, but in 2021, they have only 57. So basically in that range, still in that range. Profit margin, 5-year average of 22%. In 2021, they managed to pull off a 27%. If we add their 5-year average COGS and 5-year average profit margin, they have about 80% of revenue they keep to themselves to keep the company for their cash flow and other expenses. Compared to the previous companies, their COGS is pretty high, but they still manage to have a pretty high profit margin. Okay, looking at this chart, we can see that the price with relation to EPS and PE, we can also see that there's this range in PE where Apple is normally trading. From 2009 to 2020, Apple trades within the high PE of 22 and low of 10 for 47 quarters with an average PE of just 14. Currently, we're at 28.58, so that's double, way above the average PE for 47 quarters. But I think Apple will continue to grow and buy back shares. But I will only be buying Apple at these PE ratios, 16, 18, and 20, with high EPS multiple of just 3. Currently, we have 4.7, but that's pretty high. I can only pay 3. That price would be around 120. So that's 40% cut from its current price. You might be thinking, why so low? Remember guys, compared to other growth stocks, their COGS is 60%, almost 2 times the normal COGS of FB, Google, and Microsoft. They only keep about 20% of their revenue to themselves. Compared to other growth stocks, they keep 30%. While they are almost par in profit margin, 20%, with the others, they only get to keep 18% to themselves to cover their FCF, to maintain their company, and to pay other costs. And that is why I'm discounting the PE. I am buying Apple around 120. Okay guys, looking at Apple's charts, we can see the parabolic rise of the stock, and I see some gaps I want to see filled. Oh, and I realized that they split the stock in September 2020 and the price was around 130, and I said I'd only be buying Apple at 120. So now that might seem impossible, but I assumed very low PE for the stock. Apple's financials should prove to me that the 2021 revenue growth is not an anomaly and will either stay at those levels or only grow more from there. Only then maybe I'll change my assumptions. But for now, I'll still be buying Apple at only 120.